Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be your mortgage rate update. Hey guys, this is going to be the shameless plug, so let's get this out of the way. For up to 50% commission rebate on purchasing your next home, 0% listing on selling your current home, or any of the mortgaging products that we will be talking about in this video, link in the description below. We'll be more than happy to help you out. Now let's get on with the video update. What we're also going to talk about is the new vape tax. As of July 1st today, 2022, there is an addition to sales tax that's called a vape tax. I'm going to go ahead and talk to you how much that it's going to be, give you a couple of scenarios, and give you some of the nitty-gritties and the breakdowns of exactly these e-cigarette taxes that are be going on. Now, I've been doing these mortgage rate updates now for quite some time, and then somebody commented, which I'll go ahead and do I tag or no, whatever, but somebody asked me like, how is your rates less than, let's say, the average rates across the board, right? If the Mortgage News or any other platform that gives you mortgage rate updates, right? The reason why my mortgage rates are less than the average, the reason why my mortgage rates are less than, let's say, a JP Morgan Chase or a Wells Fargo or a Bank of America is because, well, I am solo. We all sell to the same place. There's no difference between where JP Morgan Chase sells and where I sell. There's no difference between where Bank of America sells or I sell. There's no difference between Wells Fargo where they sell and I sell. The only difference that it comes down to is something that's called a portfolio mortgage product. Now, portfolio mortgage product is somebody that ends up holding onto the mortgage product and then they are going to service it themselves. For instance, like if you have non-qualified mortgages that don't fall under the Fannie Mae or Freddie Mac guideline, because that's the insuring body, that's who we sell to, our rates all end up staying the same. But if it doesn't fall into that category, well, they're going to keep it on their books and then they're going to dice it up and then they're going to go out and try to sell it the way that they can, but they're going to keep it on for a lot longer. We all end up putting it on our books for a day and then selling it the very, very next day. So just to give you an idea of exactly why our mortgage rates are relatively the same. Now, I didn't really explain why my pricing is different versus the other person. So I am the CEO, I am the owner, I am the broker, I am the direct person that goes into this mortgaging company. Now, for me, this is where it starts and this is where it stops. The only difference that you have when it comes to mortgaging products and pricing from my end is if, like, let's say for instance, I have to pay out a loan originator or I have to pay a processor because a file is just too big or we're a little too swamped. Other than that, we don't have, so this is how a structure works at, like, let's say a bank or a credit union or anything like that. First, you have your mortgage loan originator. That's a person who originates the loan. That's a person who does majority of everything, okay? Before them, lower down the tier, they have something that's called an assistant, a loan originator assistant, an LOA. Above them, then they'll go ahead and have what's called a home loans manager, okay? See where I'm getting with this? Above that, they have a home loans executive. Above that, they have a home loans vice president. Above that, they have a home loans like VP or vice president or CEO or whatever it is that they call them or whatever title they brand themselves at. They have them. Then on this side, they have their processors, they have their mortgage loan operations managers. So you see, all these people end up having to get paid. Me, on the other hand, I do all of the work that they do and some on my end. So that's why I get to save, because what we do is we go ahead and tie in the compensation within the rate. If we tie in the compensation within the rate, that means that I'm able to go ahead and give a lesser amount that is available, a better rate to you than, let's say, for instance, they can. So I hope I explained that. If you have any other questions, please feel free to comment. I'll be more than happy to answer any one of them. But as of 7/1/2022, what we're going to go ahead and do is we're going to go price out 10 different mortgaging products. It's going to be a 30-year fix, a 15-year fix, a 30-year jumbo, a debt service covered ratio loan, a bank statement loan, an FHA 30-year loan, a 7/6 adjustable rate mortgage. And if you don't know what a adjustable rate mortgage is by now, it'll stay fixed interest only for the first number, which will be 7. Then it gets adjusted every 6 months after that, according to the rate and the cap on your product. That goes the same for like a 5/1 or a 10/1 or whatever it is. They all stay fixed for that initial number, interest only. Then it gets adjusted to the principal and interest after that, according to the rate and cap on your product. USDA 30-year fix, which is one of the zero down payment programs, that is going to, we're going to be pricing that out too. A VA 30-year fix, that's another zero down payment program, which we also have zero down payment programs outside of those, which you don't qualify for, in conjunction with FHA, which is also known as a down payment assistance program. And then the last one is going to be majority for hard money, or hard money for people who are in the investing side of things, where they're trying to go ahead and buy distressed properties, where they're trying to fix and flip them and just do that type of thing, okay? So let's get on with it. As of 7/1/2022, 30-year fix will be sitting at 4.88%. That is increase from the previous market day of 4.6%. 15-year fix will be sitting at 4.13%. That is an increase from previous market day of 3.88%. 30-year jumbo will be sitting at 5.38%, which is an increase from the previous market day at 5.25%. DSCR loan, debt service covered ratio loan, which is an investment loan that just goes ahead and qualifies you based off of the total rental income coming in rather than your total income that you have, whether it's from a job or wherever it's from. That'll be sitting at 8.75 from the previous market day at 8.10. Bank statement loan is going to be sitting at 8.13%. That is an increase from the 7.20 of previous market day. FHA 30-year fixed will be sitting at 4.35%, which is an increase from the 4.15 previous market day. 7/6 adjustable rate mortgage will be sitting at 5.25%, which is an increase from the 4.88% previous market day. USDA 30-year fix will be sitting at 4.25%, which is no change from the previous market day. VA 30-year fix will be sitting at 4.73%, which is an actual decrease from the 4.80% of the previous market day. Hard money fix and flip loans will be sitting at 9.15%, which is no change from previous market day. Now, there's this new thing that's actually, as of today, it's called the California Electronic Cigarette Exercise Tax. So what is an exercise tax? Now, I'm not a vaping guy. I don't vape. I actually, honestly, I guess it's a healthier version of smoking. I think it's all pretty much really, really bad. So beginning July 1st, which is today, electronic cigarette retailers are required to collect from the purchaser at the time of sale a California electronic cigarette exercise tax at the rate of 12.5% of the retail selling price of electronic cigarettes containing or sold with nicotine. Senate Bill SB 395. So I'm assuming, I briefly went over this. I'm assuming that majority of it is not going to be based off of your regular vape. It's only going to be off of something that has a nicotine-based delivery system. So if I mean, I've done the vaping. I think everybody's tried it at least once, where you have the little cartridge that goes inside of it, and then the liquid that goes inside of it. If the liquid contains nicotine, then that is what goes ahead and gets taxed. So let's go ahead and see exactly what they considered an electronic cigarette. A device or a delivery system sold in combination with any liquid substance containing nicotine that can be used to deliver nicotine in an aerosolized or vaporized form to a person. Examples including for the following items: sold with any nicotine liquid or nicotine substance that is packaged together as one unit or sold for a single price with e-cigarettes, e-cigars, e-pipes, vape pens, or e-hookahs. Whatever the hell any one of those are. I didn't even know that there was that many of them. So a component, part, or accessory device described above that is used describing the operation of the device is sold in combination with a liquid substance containing blah 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 blah. What it essentially is just saying is that, hey, listen, if the e-cigarette or the e-hookah or whatever else that they went ahead and categorized, that it's going to go ahead and hit you at it's going to be at the tax rate. Now here's an example of exactly what so here's going to be an example as of today. Every one of you guys that sit there and smoke vapes and all that other good stuff, this is actually going to be the breakdown of how it's going to work. So for instance, the collection of the 12.5% is in addition to already a sales tax, which just means, for instance, okay, if you bought an electronic cigarette right here, I'm going to put an example up here. If you bought an electronic electronic cigarettes at $20, the CECET, the tax on that is going to be $2.50. Then on top of that is going to be a sales tax of $1.60. So your $20 is going to be at $24.10. I'm assuming that the only thing, I mean, you could get around that if you bought the liquid and the pen separately, which will go ahead and decrease the amount that you're going to go ahead and have to pay for the electronic e-cigarette. But that's going to be the new tax that's going to be, I mean, it's bad enough that we have enough talks about it. I mean, as long as, surprised they didn't do it for cigarettes. Surprised that they only did it for, like, what's the point of doing it for vape pens? why add the tax in addition to, on top of that, when cigarettes don't have that? Cigarettes are terrible for you. I mean, I'm assuming they're both really, really terrible for you, but why wouldn't they have it on this one? Let me know what you think. Comment below and say, does this make sense? Because am I the only one just not understanding? If you're gonna do it for cigarettes or to vapes and whatever it is, why wouldn't you do it to cigars? Why wouldn't you do it to cigarettes? Why wouldn't you do it to actual tobacco products, the tobacco products that you could go ahead and pop and roll and all that other good stuff? Well, if you like the content, go ahead and like, subscribe, comment, all that other good stuff for up to 50% commission rebate on selling your next home. Any mortgage and products that we went ahead and discussed before, or 0% listing on selling your current home, link in the description below. Until next video, peace.
I don't wanna waste a minute. Don't know when the plans swing it.